agent and I have a client, and the client, his property is worth $800,000, and this is what it's worth. So we're gonna say value. He owes. This is my client. He owes $350. And he wants to sell the property to his son. And the seller, my client, wants to make $100,000. And I'm going to charge him 5% as a real estate. So, what is the loan amount that you have to do? What is the price that you have to do? Shanalicious?
Yes, I'm here.
Okay.
You have to do, I don't know, 800,000.
Hold on a second. I'm the real estate agent, so don't say I don't know. Because the first thing that I'm gonna say, well, can you talk to your boss then? Can you talk to Oscar? Should I be doing the loans with Oscar and not you?
And then I would say, good luck with that.
Yeah, he has a bad temper. Okay, so I'm a real estate agent, Shauna. Go ahead. There's no questions. You guys told me that there was no questions. And I'm gonna test on it also. Okay? Go for it, Shauna. Going once. Shauna, are you there?
Yes, I'm here.
Are you still with us? Or are you
I'm trying to do the math.
Okay, okay.
Está haciendo mano. Está using calculator. O una, ¿cómo se llama? Abacus.
So would the loan amount be 640, and then we will subtract the 350 that he owes, plus the 100,000, so that'll be subtracted 450. 800, and he's charging 5%.
Say that again?
Yeah.
So that's 40,000 plus the 450. So it would be 490.
490, okay. You missed the closing costs.
God damn it. Plus about $10,000 to $12,000 for closing costs.
On the buyer side, and you missed the closing costs on the seller side.
So 20,000.
Yeah. So you're short for about 20,000. Does it make sense, Shanna?
Yeah.
So if you're short, you gotta remember, you're only gonna find short that you're short at the very end. You're not gonna find short. I mean, you're gonna say, well, why Phil didn't find out? Because Phil doesn't know if the seller is coming with money. He doesn't know if the buyer is coming for money. So Phil doesn't care. So if you're short, it's your decision. And if everybody's asking you to close, and you're short at the end, it's gonna have to go to underwriting again. You're gonna have to increase the loan amount because you were short for $20,000. And it has to go to underwriting, and hopefully he will get approved the client. So you have to be very sharp from the beginning, very sharp. Gonzalito, straight out of the Copa America.
Aquí estoy.
Okay, so the property's worth $800,000. Gonzalo,
Okay.
I owe $350. The client wants $100,000 cash out. The real estate agent is charging 5%, which equals $40,000. What is the loan amount that you have to do?
Add everything plus closing costs, both sizes.
Oh, what a set of balls. What a tremendous set of balls, and that's why I like you, Gonzalo. Add everything, and that's it. What is the loan amount, Gonzalo?
Okay, 450,
Okay, 450,
Oh, he's adding.
for 490,
490 because of the commission.
yeah, and 25, for 520.
Okay, 25, you said 25 for closing costs, right?
Yeah,
Uh-huh. 25 is 115, 520, you're right. I mean, if you go a little bit over, so Gonzalo put $25,000 to closing costs, Shana put 20. So Gonzalo put 25, more or less, and then this totals 515. So Gonzalo went to 520. Is Gonzalo wrong? I mean, the only difference is that the seller is gonna get 110 instead of 100. So no fault there. So if Gonzalo wants to be a little bit over, that's fine. The problem is when you're short. The problem is when you're short. Does it make sense, Gonzalo? Does it make sense, Shana?
yes.
Okay, sorry guys that I'm putting you on the spot. But remember that I said that I'm the real estate agent? How do I write it on the contract? How do I write the contract?
Purchase price of 800.
Anyone? Summers? Because there were no questions.
800,000,
100,000.
and then you're going to,
On the example of Gonzalo,
Well-
Shana, I'm sorry to interrupt you. On the Gonzalo said that the loan amount was gonna be 520. So we're gonna base it on 520. How do I write it on the contract? Because, I mean, the real estate agent, Fernanda is a real estate agent. Fernanda, have you done a give of equity, Fernanda?
No, not yet.
No, so would it be a good question to ask the loan officer, hey, how do I write the contract?
Yes.
Okay, so Shana, Gonzalo, how does Fernanda write the contract?
I would say you're making 40,000.
800,000
800,000.
purchase price.
Uh-huh.
$490 loan amount.
No, stop it. Uh-huh.
Okay, 800 purchase price,
800 purchase price,
520 loan amount,
520 loan amount,
25,000 seller credit for closing costs,
25,000 seller for closing costs,
and 100 of give of equity.
and 100 of gift of equity. Okay? So, yes. How do I write it? Where do I put gift of equity? Fernanda, where do you put gift of equity? Do you know, Fernanda?
No, and I'm confused because of the credits. It can't be over a certain amount, right?
Okay, so, so the purchase price, Maria and Ademar told us $800,000. The loan amount is gonna be 520, or the down payment is $280,000, either one, yes, So, this is normal, this is the way that you write the contract. So, purchase price and down payment, that's normal. Now, there's a section that I'm gonna show you in a minute. There's a section that on the contract that you can, there's a section where you can put the closing costs. Maria is right. I'm helping for the closing costs. The only thing that Maria was a little bit off, the $25,000 worth for the closing costs of both of them. It was a closing cost for the seller and the buyer. So there's a section that helps you with closing costs. You can put it there, or you can put it on the bottom of those sections where it says other terms. In other terms, you can put seller to help for the total closing cost. don't limit yourself for just an amount in this scenario. Because if you limit for that amount, what if, in the case of Maria, $25,000 was over. But if you put $10,000 and it's 15, then the buyer has to bring 5,000. So seller to help for the total closing cost, recurring and non-recurring. Forget about that. In that section that I'm going to show you in a minute, seller down payment will come from a gift of equity. Down payment will come from a gift of equity. Period. That's how you write the contract. Can we bring a contract? Don't worry about it, that it's a gift of equity. I tell the agents, yeah, but where is the down payment coming from and everything? Just on the other terms, down payment will come from a gift of equity and seller to help for total closing costs, period. So can we go to, sorry. Thank you. So this is the contract. So they decided the purchase price to be, give me one second, sorry. They decided the purchase price to be $800. They decided the loan amount to be $520. That is correct. And then there's this section where you select the credit for closing costs, any credit to the buyer. And here you put an amount, $10,000. You can skip this one, and you just go to the bottom. And to the bottom it says other terms. In other terms, 1, down payment is coming from a gift of equity. 2, seller to help for the total closing costs. Period. That's it. Call it a day.
Not a specific amount.
Not a specific amount. If you're going to cover the total closing costs, either you have two options. One, go with $25,000, like Maria said. $25,000 doesn't mean that you're going to give $25,000 to the seller. It just means that it's $25,000 for the closing costs. If the closing costs are $15,000, then it will only help with $15,000. You can decide to go that way, or you can put it here, just the total closing costs. Make sense? Any questions, real estate agents? Does it make sense, Fernanda?
Yes.
Okay. What concerns me is that none of you had questions at the beginning. That's what concerns me. Now, the real estate agent comes, and it's very common in this transaction. It's extremely common, not common. It's extremely common in these transactions that the real estate agent comes to you, and the real estate agent tells you, hey, what is the purchase price? What is the down payment? But I'm not going to write a contract. What do you mean? Well, I don't need to write a contract because they're family members. I'm just going to charge a consulting fee. I'm going to charge my consulting fee of $40,000, but I'm going to charge a consulting fee. Very common. Extremely common. I don't blame them. Whatever. So, you do the loan. You talk to escrow. How do you write the contract? A piece of paper. Maria said. A piece of paper. That is how you write the contract. Whatever we discuss here, we're just going to write a piece of paper in Word. Hey, this is the address. This is the purchase price. This is the down payment. Down payment is coming from a gift of equity. Closing cost, total closing cost. Seller, buyer, you give it to escrow. Escrow does everything.
Those are the terms.
Those are the terms. Escrow will create the escrow instructions. The escrow instructions are, in a way, a copy of the contract, and that's it. And you call it a day.
¿Qué le contestas a un buyer cuando te dice, why are they charging me? Why is a consulting fee from a ruler?
Maria is asking, what do you tell the client? Why are they charging me? Because you hire him. Your dad hired him. I mean, you need to talk to your dad. I mean, they usually take care about insurances. They usually take care about anything that your dad might lie about the property, which I doubt. I don't throw the agent under the bus. I will never say you don't need to charge on this transaction. I will say, but you need to talk to your dad and you need to talk to about the real estate agent. In a lot of transactions like this come from refinancing. The seller just wanted to make $100,000. So if they involve a real estate agent, they involve a real estate agent. Now, my brother Enrique has a very good answer. He says, well, how did you meet Oscar? You met Oscar because of me. So I'm giving you the service of taking you to an escrow. I'm giving you the service of taking to Oscar. Oscar is putting everything together. I'm the one showing you this. I'm the one doing the transactions. I'm the one. So don't tell me that I don't do anything. Even as a loan officer, if we criticize the real estate agent and says, the real estate agent is not doing anything on this transaction, well, how the fuck did the client came to you? It came from a real estate agent. So don't say that the real estate agent is not doing anything. Make sense? When Enrique told me that, I was like, that makes a lot of sense. Makes a lot of sense. So just so you know. Any more questions about this? Can I have another test on next week, Annette? On this one? No? Any more questions? If you don't have any more questions, I will say that you dominate the thing. So no more questions. Then we go to the next subject. The next subject, guys, is just real quick. I'm going to talk a little bit about FHA spot approvals, and then Pulido is going to talk a little bit about conventional condominiums. A little bit about it. Spot approvals. I'm getting a lot of spot approvals. It's a very simple process to get a unit approved by FHA. Before we go to the spot approvals, I don't know if you have noticed that we're a pain on the you-know-what for you guys. We're a pain, operations, Annette, Prissy, Adriana, Alex, Pulido, myself, and Sarah. We're a pain when it comes to disclosures. We need the disclosures. If you don't have disclosures, we don't submit to underwriting or something like that. Now, the reason being is that you cannot have an FHA number, case number, dated prior to the disclosures. So if you're going to get an FHA case number, that FHA case number, it needs to be dated after the date on the disclosures. Now, this is very frustrating because sometimes you want to order an appraisal, and you want to say, hey, let me get this appraisal going and everything, and it's an FHA. The appraisal is not going to do an FHA appraisal if it doesn't have the case number. So you say, okay, well, just get me a case number, Adriana. I'm the broker, Adriana. You should be able to get me a case number. Well, if I don't have a loan application, then the disclosures are going to be dated after the FHA case number. So Adriana tells me, well, you need a loan number. I said, well, Adriana, it's because they're negotiating, and the agents are fighting because of it, and they want me to order the FHA appraisal, but I don't have it yet. Well, give me a loan number. And if you give me a loan number, then we're going to disclose on that, so the date of the disclosures are previous to the FHA case number. And it becomes a headache. That becomes a headache. And that's very hard to understand. The same thing happens a lot when you're doing a spot approval. And a spot approval, you have a condominium, a condominium complex that is not FHA approved. Now you want to submit an offer, your agent wants to submit an offer, in this unit, and they say, hey, Oscar, can you do a spot approval? He says, yes, I can do a spot approval. It says, what do you need? Okay, I need, one, a questionnaire, answered by the HOA. This questionnaire is on an FHA format. this questionnaire is in an FHA format, a form provided by FHA. And then once I get this questionnaire, I submit it to FHA and see if FHA can do an expert approval. And when I'm talking to real estate agents, the first thing that the real estate agents do, and I have a phone call scheduled for today for 10 a.m. because they're gonna ask me about this process is, well, do it. Do it. Why can't you do it right now? And the listing agent, trust me, the listing agent doesn't want to accept the offer. So is it easy, Oscar? Yes, very easy. Questionnaire, I send it to FHA, FHA tells me whether it's approved or not. Do it. Well, no, because I don't have a loan number. And I don't have an offer accepted. And the HOA is gonna charge me anything between $300 and $500. And I don't wanna make my clients spend $300 to $500 without the contract, without an accepted offer. So if you accept the offer, what I can promise you is that probably, within 5 to 7 business days, I can get whether we can get the FHA spot approval or not. But why does it take too much? And why does it take too much? Because of the HOA questionnaire. Now, I don't want to criticize anyone. The phone call that I have at 10, is about an agent that we expect the process at on Monday. Now, I don't know what the listing agent is going through, but the listing agent probably is going through to talking to their buyers, to the sellers, and say, hey, I have an FHA, it's a good FHA, I don't have any more offers, do you want to risk it? He's coming back, I'm pretty sure that he's gonna put me with a loan officer and see if I'm not BSing, if this is the right process. What bothers me sometimes to me is like, dude, you already spent 4 days. I can show you the emails. I talked to you on Monday, Tuesday, Wednesday, Thursday. So we already spent 4 days on this. And you don't get an offer accepted. You're still gonna think about it getting the offer accepted. The offer is not gonna even get accepted until Friday. If it gets accepted until Friday, probably they're gonna send it to me at 6 a.m., 5 p.m., 5 p.m. So I'm not gonna do anything until Monday. So you already spent 7 days. And what does the agents want? I want speed. Well, no. I mean, give me something. But you have to be calm. You have to say, hey, this is. I mean, if I can throw it in, I says, dude, we've been 4 days dealing with this. 4 days. So you already spent 4 days. If you already had me, I could have started on Monday. If you would have accepted the offer, I could have started Monday. And the selling agent is pretty good. The selling agent says, don't take it out of the market. Accept my offer, don't take it out of the market. If on 7 days we don't get an FHA spot approval, then. But it's very common. It's very common. Who's going to do the FHA spot approval? Who's going to help you with the FHA spot approval? Fernanda, are you there?
Yes.
Fernanda, do a spot approval. So, do you know how to do a spot approval, Fernanda?
No.
No. Who's going to help you with that, Fernanda?
Would be my processor and the listing agent?
Your processor, yes, 100%. But it's very common. It's very common. Extremely common. And everybody's just, the agents are always working and the agents are always stressed. It's very common that the agent is going to say, okay, Oscar, and probably, hopefully, if the agent already spent 4 days, I have high hopes that after today's meeting, he's going to say, yeah, I'm going to accept the offer. Go for it. I'm going to give you a shot, Oscar. But when he gives me that shot, trust me, guys, I'm going to reply back saying, thank you. Your offer is accepted. Thank you, dude. Give me the HOA information. And the guy is going to take another day to give you the HOA information. 1 or 2 days to give you the HOA information. It's very frustrating for your processor, Fernanda. Just so you will know, you're right. The person that needs to help you is the processor. But it's very frustrating for the processor to help you if you say, hey, Adriana, Alex, I need a spot approval on this contract, and Alex and Adriana are gonna say, well, what do I do? Who do I call? What is the credit card? So, what we're selling to the agents is that we're fast. And I'm gonna do this process fast. So, in the conversation, I'm gonna say, hey, the only thing is that I need the HOA information. The sooner that you can get me the HOA information, the sooner that I can get this going. So I need an accepted contract and the HOA information. Send it to me so I can call the HOA and see what they need. I call the selling agent, hey, they're thinking about accepting your offer. Get me a credit card. Because the HOA is gonna charge me. It's very frustrating for a processor, trust me. Say, hey, get me an HOA, here's the information of the HOA, and you don't provide a credit card. And then when the processor is on that specific thing, the processor is not gonna follow up. I don't care how intelligent or how fast and how on top of the transactions the processors are, Alex or Adriana, on this specific issue, if you don't provide a credit card, the processor is not gonna follow up with you. The processor is just gonna think that you cancel the transaction. So you need to be on top of it. Hey, Adriana, here's the HOA information. Call the HOA, tell me how much they need. Do they need it by check? Do they need it by credit card? Adriana's gonna reply back, Oscar, they need it by check. They needed to take it over at this location. Hey, agent, get me a check and I'll take it directly, or ask the client to go and take it directly. On top of it, on top of it. If you're not on top of it, you won't be able to do it in 5 days. You won't be able to do it in 7 days. You won't. I did a spot approval last week. I started the process, I believe, on Tuesday. The HOA told me, if you want to rush, I can have it by Monday, the questionnaire. So I started on Tuesday. On Monday, I received the questionnaire. On Tuesday, I had the FHA case number. FHA is very fast.
Oscar,
Yes.
a quick question. What's the possibility to get the FHA approval in the condos, 1 to 10?
In the what, I'm sorry?
Possibility.
In the possibility to get the spot approval, any condo,
No.
is high?
I only had one condo, and I have done about, we have done in the company, Pulido can contradict me if I'm lying to you guys, but I have done about 20, and we only had one that it was not approved.
Wow.
So almost every single one
Sorry,
gets approved.
you say not 21 not approved.
That is correct.
19 good. Okay.
Uh-huh. And the second is gonna be yours, Gonzalo, for very proud. But they do get it, and they do get it very fast. I had one that even the FHA, I did it myself because Adriana was on vacation. I said, Adriana, I need to submit it to FHA, so the questionnaire was in the air. I was waiting for the questionnaire. Adriana was on vacation, we received the questionnaire. Adriana told me every step to send it to FHA. I sent it personally to FHA, and FHA told me, hey, dude, this is a PUD. You don't need an FHA, you don't need an approval. It's a PUD.
Oh, wow.
And it was a condo that shared walls. It was a condo that shared walls for whatever reason. It was a PUD. FHA told me you don't need it. Boom, it went straight. Very fast FHA, extremely fast right now. They tell you that it's going to take 3 to 5 days, but lately they've been very fast.
1 to 2 days, yeah.
Believe it or not, that almost every single one gets approved.
Yes, you're correct.
Main reasons not to get approved, what would you do?
Supposedly, FHA, what FHA looks for is that they don't want, for whatever reason that I don't understand why.
Litigations.
No. We're gonna talk about litigations and we're gonna talk about the rest of it in a minute. They don't want more than 10% FHA, they call it, the word is,
Reserves?
no, 10% more units. And the total amount of units, they don't want 10% of the units more FHA. So, if you have 100 units, it should be only less than 10.
on a spot approval.
on a spot approval.
Yeah.
On a spot approval. So if you have 100, they call it concentration, concentration. So the problem is if you have 10. If you have 10 units, then only one. If you have 2, then it's just 20%. You're stuck. If you have 100, if you have 150, Gonzalo, chances are that they will get you the FHA case number. Chances are. Because the concentration on 130 complex is that no more than 13 units. Since it was not FHA approved, chances are that there are not 13 units FHA loans on that complex. Make sense? The higher the amount of the units, the better chance that you have.
Okay.
Now, going back to what Ademar said, that doesn't mean that the underwriter is not going to underwrite the complex. So FHA just says, hey, I just don't want more than 10% concentration on this complex. If I don't see more than 10%, boom, boom, here's your case number, go for it. FHA spot approval. Now, the underwriter is going to ask you for the questionnaire. The underwriter is going to ask you for the budget. The underwriter is going to ask you for all the reserves and all the good stuff.
But this is like a regular conventional too, right? The same question that they're going to make it.
That is correct. That is correct. That is correct.
So if it doesn't pass it, in that case, doesn't pass it neither in conventional loan.
That is correct. Well, conventional loan with 10%, they wouldn't ask you for the budget and all of that. But with less than 10%, they're going to ask you for budget. They're going to ask you for the budget, the financials, and all of it. So 1, FHA questionnaire. I need to get it as soon as possible. 2, I submit to FHA. Now, explain to the agents, once I submit and once I get the case number, if I get the case number, it's not that FHA is approving the condo. Because the way that I say it is approve. It's not approved. The third step is that it still has to follow to the underwriter and check the financials and check the budgets and check the late condos that are there, the investor concentration and all of that.
So it's not a done deal.
It's not a done deal. It's not a done deal. Now, if you have a question, Gonzalo, out of the 19 units, how many units Phil has denied?
Okay, before to go deep,
Uh-huh.
I have just to be clear. The unique answer to get a spot approval is if you have less than 10% of the another spot approvals in the unit. That's it. They don't looking for finance. They don't looking for nothing else.
That is correct. Uh-huh. When you say that they're not looking for finance, in a way they're looking for finance FHA. So if 10% of the units have finance FHA, more than 10%, you will not get an FHA spot approval. If less than 10%, then you will get an FHA spot approval. So there's 20 units here. Out of the 20 units, FHA says, okay, you're asking me if I can get a spot approval? If there's only one, yeah, you can get a second one because there can only be 10% FHA concentration on this complex. If there's 20 units. If there's 20 units, I only want 10% concentration on this complex, FHA financing. Now, if for whatever reason, there's 3 units, and it could be there is 3 units, I'm going to tell you the scenario where it could be 3 units, then the concentration is more than 10%, you're not going to get an FHA case number. In what cases, very randomly, in what cases do you have 3 units? If you say, Gonzalo Velasco, you're telling me that the complex is not approved. If the complex is not approved, how the hell do you have 3 units? FHA doesn't make any sense. Well, it could have been that it was approved in 2015. And in 2015, there were clients that did FHA loans. Now the condo is not approved anymore, but the FHA loans are still there. If the FHA loans are still there, then that's how they have a concentration of units FHA. Does it make sense? Make sense?
Yes, sir.
Yes.
Gonzalo? Does it answer your question?
Yes.
Now, what I tell the agents, I don't know, dude. I mean, don't put the stress on me. I don't know. What I can tell you is that in a week, I will have an answer. I'm not gonna mess around with you. I'm not gonna take you there and there and there. In a week, I will have an answer if I have an FHA case number.
Also, I think I saw once, Oscar, when you check if this FHA approval or not.
Uh-huh.
I think once we saw, spot approval decline, denied or something like that, so might as well not send it, somebody denied. Or approve, remove, something like that.
The ones, when you check if the condominium is approved or not, what Maria's saying is that in one, it read spot approval denied. So if the spot approval denied, chances are that your spot approval will get denied. Chances are. Who knows? If they sell the units, probably there's units there. But if you see spot approval is denied, chances are that it will get denied. Other than that, anyone that is expired, anyone that it was submit a whole package and it was denied, you can still get an FHA spot approval. You can still get one. Because they don't check anything. So when you get a complex approved, the whole HOA submits the financials, the budgets, and everything. On this one, you just need the case number. No more than 10%, here's the case number.
So why they ask for that question?
Just to get the right address, I think, and the right condominium.
They check owner occupancy ratio too.
The PUD that I did, and don't tell Phil, the questionnaire had litigation. So I submit the spot approval without knowing what the litigation was. So I call the agents and I say, hey, do you know what the litigation is? Something minimum, blah, 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 blah. Okay, let me see what FHA says. So I submitted a questionnaire with litigation. Now, in this specific scenario, the FHA tells me, hey, this is a PUD. So you don't need a spot approval. So, okay. And then I call Phil and I say, hey, Phil, this is a PUD. Do you need the questionnaire? And Phil says, no. Okay. Okay. So nobody found out about the litigation.
Or that now, when they transfer the HOA documents to the buyer.
So I got very lucky there. Extremely lucky there.
But it was weird because they were attached, right?
Any more questions? Comments? No?
Good morning, Oscar. Hi, it's Dulce.
Hi, Dulce.
Hi, Oscar, I have a question just to make sure. So you say that to request the questionnaire, the HOA questionnaire, first we have to have the offer accepted and disclosures signed,
Yes.
correct?
Yes.
Okay.
Well,
Thank you.
the
No?
first thing that you need is the questionnaire. For the questionnaire, you don't need an offer accepted to send it away. But Dulce, the questionnaire, you don't need an offer. You don't need an offer
Okay.
accepted, but the questionnaire is gonna cost you $300 to $500. So the question is, will I make my client this amount of money without an offer accepted? I won't.
Oh, okay.
I won't.
Okay, I see.
And I tell the agents I won't do it. But if you want your offer, I won't do it. If you don't
Okay.
accept this offer, I will not submit it. I will not even don't make me work without knowing that an offer is accepted. Yes, Gonzalo?
Okay, in case that this agent is our client, and and we can suggest him to get the questionnaire before to receive any offer, just to be sure that can we go that way?
Yes. Now, you get the questionnaire, but you cannot submit it to FHA, and that's the question with you, Dulce. You get the questionnaire, like Gonzalo said. The questionnaire looks good, but you don't know if there's a 10% or not concentration. You cannot submit to FHA Because if you get it approved without FHA and you don't have a loan number, then your disclosures are dated after the FHA case number. FHA, if it gets approved, they will give you a case number. That case number, it has to be dated after the disclosures. After the disclosure. So you cannot submit this questionnaire to FHA unless you have a loan number. Unless you already disclose.
Okay, so there's no way to get the FHA approval before to get any.
If you don't have a loan number, yes, there's no way. Unless you're just messing around. Unless you're just messing around. What do I mean by messing around, Gonzalo? Meaning that you send an FHA case number with Oscar Campos and you know that Oscar Campos is not your client, and you just say this is the loan number, you submit it to FHA, I get a case number, and you can tell the listing agent, yeah, there's a case number. It's tied to Oscar Campos because the case number is tied to the property and to Oscar Campos. And then you get an offer accepted, and you get an offer accepted with Maria as the client, and then you need to do an FHA case transfer. But that's too much of a headache. Any more questions, comments? Does it make sense to say the answer? You can get the questionnaire, but cannot submit to FHA because of the disclosures.
Yes, thank you, Oscar.
Any more questions? So Pulido is going to talk a little bit about conventional condominiums.
Sure. Let's see how much time we have. Yeah, sure.
Sure.
Okay.
No se dejen confundir con Pulido, por favor.
Why would they get confused? This whole condo issue is a big mess, just so you guys know. Okay? Whether it be conventional, FHA, whatever, it's a mess trying to get, especially in the last couple of years, or maybe Angela, you could help me out. Has it been like a couple of years since this the Florida situation that now we have Fannie Mae involved in getting the whole thing. So regardless of so before this fiasco with Florida thing, you know, you had conventional and FHA on a condo. You need a questionnaire for both. Okay. Now, I'm not going to talk about all the differences between FHA and conventional, but for the most part, conventional is a little more lenient in getting the condo, you know, approved financing. Okay, but one of the things that FHA will look at versus conventional when you submit the questionnaire is whether the complex is more than 50% owner occupied. Okay, so for FHA, it needs to be at least 50% owner occupied complex. Conventional, if you're doing a loan for your borrower owner occupied, they do not look at the current ratio of owner occupied versus non-owner. If you're doing an investment property, conventional, then it does become then in order for it to be approved, it does need to be no more than 50% already non-owner occupied. Does that make sense? Yeah. Okay.
Sí.
Okay. Okay. So other than that, they've what is it? What's the word I'm looking for? Not summarized it.
Streamline.
Perfect. They streamlined the process. Now the questionnaire that you're using is all the same one for both FHA and conventional. It's called Fannie Form 1076. It's a standard questionnaire form. Okay. Not the spot approval. The spot approval has its own questionnaire. But aside from the spot approval, if you're doing a regular FHA or let's say the condo's already FHA approved, you still need a questionnaire. We know that, right? On every situation, whether conventional or FHA approved, you need a questionnaire because, like Oscar said, once the let's say if it's FHA approved, it still has to go through underwriting, and they look at the other stuff, the financials and budget and all that. So, but what has happened in the last couple of years is that because of insurance issue, they look at the master insurance, they saw that a lot of these HOAs were underinsured. So if that being the case, so in the last couple of years, we've had a lot of conflict to say, no, this is not insured by FHA. So this is, and I'm not sure if Luis is in the meeting, but in the last couple of months, we've had a hard time with him checking. He was calling me asking, can you check to see if this complex is whether FHA or Fannie Mae approved? And he even had one where FHA said it was okay, on a spot approval, so you got FHA, but Fannie Mae could turn around and say, no, the whole complex is not insured.
Toledo, ¿me escuchas?
Loud and clear.
Toledo, ¿me escuchas?
Loud and clear, yes. Can you hear me?
Yo no te escucho a ti.
Oh hell. Why not?
Toledo.
Okay. Okay. Dawson, I need your help.
Okay, we can, I hear you, sir.
Ahora
Yeah,
sí.
yeah. Okay, where?
It's only Gonzalo.
Oh, it's only
Sí,
Gonzalo.
Pulido, yo sí te escucho.
Okay, so Dawson, talk to Gonzalo. Bueno. Okay, so
Dale, Pulido, dale.
dale pues. Entonces, now every complex, I mean, Oscar or I or Phil can check, because every complex needs to be checked to see if it's going to be Fannie Mae approved. Before it was just FHA approved. No, now even if FHA approves it, because after all, an FHA loan is still also a Fannie Mae loan, correct? So it's still insured by, it's bought by Fannie Mae, insured by FHA. So what they're looking for is that the under master insurance, see, that the deductible on the insurance is no more than 5% the responsibility of the borrowers. Okay, and for that, the only way to know that, I mean, you get the master insurance and submit it to underwriting, and then they're going to tell you. But as I'm going to use an example right here. Let's say a condominium complex. Let's say that they have their master insurance and they're insuring it for $6 million. Okay? So, and they say the deductible on this is $80,000. Okay? So doing any quick math, I mean, 80,000. What percentage is this for 6 million? It's only 1.33. So that's way it's under 5%. So this in the first part, I mean, we're okay. You're under 5%. But then they say, well, okay, hold on. But it's per unit. How many units are in the complex? And this is where it gets complicated. Okay. So if, for example, there's 20 units in this complex, okay? So if there's 20 units, each unit, let's see, 6 million divided into 20, come up with, ¿cómo? Sorry. Okay, 5%, okay, espérate. ¿Dónde me salió 40,000? Okay. So then they're telling us it's, for the whole complex, you got 80,000, but per unit is 40,000. Okay, so, that's a big gap. Now, this is way over the 5% now. So now your HOA is not gonna qualify. If they have a master policy of 6 million, 80,000 deductible, but per unit is 40,000, so they're gonna, that comes out to about 13, this is about 13%, okay, 13.3%. So it exceeds it, so it's not, so then, in this case, they're gonna say, you're gonna require, even if your complex, let's say,
Okay, so it's 6 million,
yes,
80,000 deductible.
correct,
So that divided by 20 units is 4,000, not 40,000.
no, but in addition to this is, the policy as a whole, that you got, the policy deductible is, 80,000
For the full.
for this, yes. But per unit is 40,000, that's where it gets, like I said, it's a big mess. The easiest thing to do is say, give me the master policy, Phil, look at it, it's gonna fly or not, okay? But, for us, we're trying to figure it ourselves, but I'm just giving you generally what they're looking for, okay? So, cause it's confusing. So, it can still be, you can still make it eligible, if you purchase separately an HO6 policy, which is covers in walls in for the unit. So your HO6 policy would need to cover the difference in this case. You got, in order to meet the 5% deductible, so the 5% deductible on this would be only maximum 15,000. That's 5%. Okay? So that means that the most the borrower can pay is 15,000. So, but now we have a difference. So that's right, the HO6 would need to cover the difference between these two. So you need an HO6 policy to cover the difference, which is 25,000. So, okay, and that's just to give you a general idea. Like I said, I don't want to get too much into it. There's a lot going into it, and besides the fact that I put this together at the last minute.
That
So-
80%, you say 15% will be 12,000, so if max is 15,000, so it should be okay. It's only
No, okay.
12,000.
So no, there's a the max that a borrower could pay, the deductible, is 5%.
Yeah.
In this case, in this HOA, if they're telling you that the deductible is 80% for the complex and per unit is 40,000, so now you're looking at your borrower. Your 40,000 exceeds 5% of this. 40,000 represents 13% of
The
this.
40,000, I see like a typo, is one extra zero because it should be 44,000.
No?
One, I'm just in
Oh,
my head, you know, like
okay.
I'm thinking and it's only 4,000.
Oh, no,
But
it's,
they probably made a mistake for 40,000, like a typo, I would check.
really?
Yeah, because if you put 80% times 5 is 4,000.
Is it, Angela? Is my math right? Cause it's,
Your math is good, Leo.
yeah?
I
Sorry.
don't know.
Well, that is good, okay. Okay, so anyway, that I don't know, based on anything that I said, you guys any questions or not to contradict what Oscar said, and hopefully this doesn't happen. So yes, it is possible that, like I said, he's gonna have a client today come in and submit the HOA, I'm sorry, the questionnaire to FHA. FHA comes, yeah, you're good, okay, you're good to go. But then you get to the package to Phil, and Phil said, no, Fannie Mae doesn't approve it, sorry. So that's a possibility too, because of this situation, FHA is not gonna look at the master policy and all that. They look at the, like you said, the ratio, how many other units are approved at FHA? What's my concentration of owner occupied? Yes, Gonzalo?
But you say the Fannie Mae doesn't approve means for conventional FHA, doesn't
Correct.
matter, right?
Correct.
It's nothing to do with that.
So
Yeah,
yeah,
the-
Fannie Mae can still come back and say this is uninsurable or unwarrantable condo. But, and then FHA says, okay, well, Fannie Mae's not gonna insure it, we take that back, it's not.
And we don't do,
Yeah.
how do you call those?
Polido, is there a possibility to Fannie Mae say no and Freddie say yes?
No, Freddie Mac follows the same as
Yeah.
as Fannie.
No,
Okay.
If Fannie says no, you won't be able to do it on Freddie either.
And
Yeah,
insurable
so-
condos, we don't do it.
Just cash.
non-warrantable condos?
No, no, okay.
Well, that would be non-QM loan, non-QM loan, so, but not conforming, so, okay. I don't know if, hopefully it made a little bit of sense, but.
Sure.
Thank you.
There you go.
Okay, so what we were very used. Can you hear me, Gonzalo?
Yes.
Okay, we were very used to checking if FHA was approved, if FHA was approved. What Pulido is saying now is that since the thing happened in Florida, now we have to check if Fannie Mae's approvals. Now Fannie Mae, there's three possible answers. One is not approved, the second is approved, and the third one is that it hasn't been reviewed. If it hasn't been reviewed, then the underwriter will submit everything to Fannie Mae and we'll try to get it reviewed. What are the things that they're gonna review? Mainly the insurance, what Pulido just explained, is what they're gonna review. Even about 10 years ago or 15 years ago, I went into a competition that they call it an obstacle race. And it was an obstacle race for about, I think it was, the highest that I did it was for 10 miles, I believe so. And there was a big wall that I needed to climb. And I did it with a friend, and it was a short friend. And I remember nobody could climb that wall. And I went running and I climbed the wall and I got up. And then when I got up, there's a picture where I'm with my friend and I'm trying to pull him over. The picture is awesome because I tried to pull him over, but I couldn't because he's so fat. So he just goes very pissed out of the side of the wall, and then we continue with the race. But I felt great that I was able to climb that wall. When I saw the video, and I hope that I don't look or explain the way that Pulido does. Because when I saw the video, it was like a giraffe running. Like this. It was so upsetting to see the video. If I would have never seen the video, I would have said, oh man, I kicked ass, I ran my ass, I got into the wall and everything. But then I saw the video and it was like this.
You said delete that video.
Yeah, delete that video. So hopefully I was back there and I said, oh, hopefully I don't explain the same way that Pulido does. Thank you so much. I'll see you in the next one. Bye.
I see what you're saying about that, because